Hey everyone, welcome to your on-chain report for June 6th. So last week or midweek we talked about the demand side of things, right? We're looking at how much transaction volume is actually flowing through the chain. We looked at things like the NVT ratio to understand how much is actually moving relative to market valuation, and that's as market valuation is falling. Now, what we're seeing still is, and you know, to be honest, I can't remember the last time I've seen this. This is mempool.space. We have one block that has 800 transactions in it. This is and you can see how low the demand for transaction block space is on Bitcoin right now. The overall incoming transactions is just trending down. Again, this is very short term, but you can see the amount of the cost or the amount of gas fees, transaction fees that people are willing to pay on both the Bitcoin blockchain and also on the Ethereum blockchain. I mean, when was the last time you saw 10 Gwei as being a viable state? When we're talking about for a Uniswap transaction, $5. I mean, it's not the 30 cents that I remember when Uniswap first came out, but after being 150 for a long time, there's just no one using these chains. And I think this is signal. In terms of what we're setting up for on a technical analysis side, ultimately we're trying to reconsolidate and gain ground, but the market does keep pulling us back. And what I'm seeing here is nothing telling me that there's a whole bunch of people stepping in and buying this thing and it's all good, right? So my current position is that I think downside is probably the more likely. Now, whether we actually have downside that's just a big slingshot maneuver that stokes up all of the bears and everyone goes heavy short, and then the thing rebounds, straight up from there. We'll have to see. But in the short term, I'm certainly leaning towards a more bearish trend at this point in time. We're just not seeing the demand coming in, saying people are buying this dip in size. The mempool's full. Everybody's jumping. Maybe the smart money is accumulating, and they're just not playing that game and actually withdrawing. And there's games being played there. I don't know. I have no doubt that this is a value position in the long term, but in the short term, I think if anyone's there in that trading mindset, it is certainly something to be aware of, that right now we're just not seeing the incoming strength, right? Gas prices this low and transaction fees this low have not been seen in some time. So it's one indicator of demand. Let's jump into our Glassnode dashboard, and we'll look at both Bitcoin and Ethereum just to kind of compare them and understand how they're looking relative to each other. I think that's kind of it's important to look at both of these chains, and I think there's a similar story with some nuance between the two. So let's run through them. So we've mentioned on the Bitcoin side, we've talked about these top two charts before, our net unrealized profit and loss. And these are interesting metrics. So what we're really looking for here is how much remains on the sidelines. Are short-term holders at a loss or long-term holders in profit? And how likely are they to then go, you know what, I want to get out of this thing? So short-term holders continue to exist, down consolidating in this, significantly unrealized profit and loss. Basically 25% of the total value held by in the market cap of Bitcoin is essentially underwater. So, these are people who've accumulated early or recently. The more that they offload, right, the more that short-term holders actually sell. When we get a good move in either direction, we'll actually see how many people have essentially offloaded their coins, particularly in the upside. If it moves up, we'll be able to see that. If it moves down, it will just continue to trend down. And the long-term holders, we've already mentioned that 0.75 has historically been the point when enough unrealized gains have evaporated that they start to go, you know what, it's time for me to start getting out. So we're not at that point yet. But obviously 5 months ago, which is the long-term holder threshold, we are going to start getting to people's cost bases. So how people react to that, I mean, there really are two classes of people in the Bitcoin market. There are short-term holders. Some of those are going to transition to be long-term holders who are fairly unshaken by volatility, and their conviction is high. Over time, they will consume the coins. They are the long-term thesis. But at the moment, we're looking at a shorter to medium-term thesis, and some of those long-term holders are likely to actually sell. So that's just one thing to pay attention to and just be aware of. If we're looking at our realized price distribution, so this is our volume profile, you can see that once again, we're getting to the lower end of this large cluster. If you recall back up here in the $1 trillion zone, we essentially had that for a period of time, and we basically rallied back above, and then we fell back below. And then we did that twice until we finally lost a level. And we're now back down to the bottom of the range. it's not good, right? We're not seeing that demand come in to really give it the buy support. And if we look over here to the right-hand side, in fact, if we look at our span output price distribution, this is on today. What you can see is, I mean, if some of you may remember that our axis here is normally something like 2 to 3 to 500,000 BTC. And we're not even at 100 across all of these candles. So there's just no volume moving on chain. You can see this in our total transfer volume in USD. It's essentially collapsed back down to January levels, so same price, same transaction volume, but you can see just the significant fall off a cliff for this particular metric. So, you know, in terms of who's actually spending, so our ASOL metric, dormancy, coin days destroyed, binary coin days destroyed, very quiet. So, I mean, really, the mempool is quite literally empty. There is no one sending transactions, even old hands. So, you know, that does bode well for the conviction. I don't think that 30,000 scares long-term holders. I actually don't believe that long-term holders are going to mass liquidate. Some of them may, for two reasons. Some may sell a little bit as a hedge, but I think that the tools are available for long-term holders to hedge, whether it's options, whether it's futures, whether it's, you know, coin collateral, margin collateral, stablecoin collateral, whatever it is. There's many tools that long-term holders can use to not sell their position and realize the capital gains. So I think tax is one reason that they won't sell. And I think that the amount of tools that are available to stop them from selling or allow them to hedge their risk is just, it's growing all the time. So I actually don't think that long-term holders are going to just completely mass exit. I think the conviction does remain. A lot of our metrics are telling us this. But you can see here in the 1 year to 2 year, 2 year to 3 year, and even a little bit in our span output bands, there's a little bit of an uptick, right? So there are some who are clearly spending their coins. Some of them could even just be sending them to collateral positions, right? We don't know the destination of these. We're kind of looking at it in aggregate. So there's a little bit of spending going on, but we're not seeing like a major trend. I mean, this could become a trend. You can see that the 1 to 2 years is starting to tick up a little bit. It may become a trend, but right now it's not. So until we really see that break higher and all of our lifespan metrics really start to moon, you know, at the moment it's a long-term holders have conviction. We're just chewing through supply. And some of you may have seen the Glassnode tweet that went out on Friday, looking at the liquid and the illiquid supply. Let me just pull that up now. So this is just looking at Glassnode's Twitter account. So this is a tweet that I put together. Now, what I was really showing here is two things. So this is our illiquid and our liquid and our highly liquid supply. And the way that we measure these at Glassnode is we essentially look at how likely they are, how old are the coins, how long have they been dormant, do they have heuristics that look like a coin goes in, doesn't come out, so no spending from those wallets. It does all the entity adjustment and factors in a whole range of things. And it gives it a score, a graded score between 0 and 1, 1 being highly liquid, 0 being highly illiquid, and it basically compares the two. So any coins that are sitting on an exchange and they're moving around all the time, they're going to be highly liquid. Coins that seem to come out to a wallet, sit there for a couple of months and then move again, they're going to be more liquid. And then there's a whole new class of coins that just go into an abyss and don't move, right? They're the illiquid coins, and they're not shown on this chart. So there's two things to note. So from our peak in March 2020, that's really where Bitcoin stepped onto the macro asset stage. From that point, basically down to the recent low that we had at the all-time high, 744,000 BTC transferred from liquid or highly liquid to illiquid, right? So 744,000 BTC went from some kind of liquid state into an illiquid state. Now, from this recent sell-off, we've had a number of coins flow back into exchanges. And during this May sell-off, 160,000 BTC, and if you compare the 160,000 BTC to this 744, so we had 744,000 flow out, 160 flow back in, that's 22% of the total 744. So call that 20%, that's a fifth. So 1/5 of the coins that moved from a liquid state to an illiquid state have then come back into liquid circulation. That's 20%, not 80%, right? So I think that's an important metric to keep in mind, that we need to chew through 160,000 BTC before we start to head higher. It's a substantial amount of money. And especially when we're seeing demand numbers are low, but the lower the price goes, the more coins are going to get accumulated. So it does strike me as a question of when, not if. I believe that we will chew through this as a market, as a long-term holder. I believe that we will chew through this supply, but I think it's going to take time. Price may go down in order to accommodate that, but the lower the price goes, the faster that accumulation will happen. So this is kind of the balance in the game that we're going to be playing, I think, over the next 6 to 8 months, just as the market works through it. But it's important to note that we're talking about only 22% of the coins that essentially got pulled off the market. So let's talk about conviction, all right? That's 80% or 78% of all the coins that have essentially been accumulated in the last 12 months have essentially stayed there, and that to me that's pretty positive, right? That's the kind of signal that you want to see. If it was 50%, I'd be way more concerned. Sure, we may see this trend higher if price goes lower, but these are the supply dynamics that we're looking at and trying to just get an appreciation for over time. So there's a little bit of this old hand spending. In terms of our net entity growth, you can see, again, this is a week lag data, this stuff, but you can see that the total number of new entities, this is growth in new people coming on chain, is seriously falling off. So again, that's another sign that our demand is not there. Our adjusted SOPR is broken back down below 1. Short-term holder SOPR is again also below 1. What this is telling me is that essentially every coin that's moving is more or less taking a hit, right? They're selling, they're people who bought at 55,000, 40,000, 60,000, and they're currently spending down here at the bottom. So we are going to have to chew through this short-term holder supply, and this is where I'm saying I think it's going to take time. In terms of our percent addresses in profit, I think I mentioned in one of our previous videos that these are interesting metrics. If a whole bunch of people spend their coins now, their address is going to go, and okay, so let's say that somebody bought a coin at 55,000. They then spend their coin at 30,000 because they're concerned about, the price has fallen over, they're down 30%, 40%, they go, I've had enough, I'm out. So their coin goes from 55,000 to 30,000 in terms of the realized cost basis. The person who bought that coin now owns it at 30,000. If price goes to $30,001, right, $1 higher than that, then our percent of addresses in profit will tick up by that one address, right? So what we're going to see in this percent addresses in profit, now if price trends lower from here, then we'll just keep seeing all of those coins that moved at 55, then moved at 30, and then price goes lower than 30, then they're all still going to be at a loss. We don't know whether they were at 55 or 30, it kind of doesn't matter. So what we're going to see is this metric, if it goes the other direction and it trends higher and we get a rally in price, and let's say that, okay, let's imagine that 22% of supply that was spent has gone back into liquid circulation. Let's just imagine that 20% is accumulated right here at 30,000, right? So we're at $30,000, that 20% moves off the market, and then suddenly, as a result, right, feedback loop, price rallies. Suddenly that 20% of supply is now going to be held by addresses that are in profit. So we may not need, and you only need to go $1 higher than that cost basis for that to be considered in profit. So what we will see when we finally do get a relief rally is these metrics, the scale, the magnitude of how much this rallies, and price may only rally by $5,000 or 3%, 5%. But once it gets above this accumulate, or wherever the accumulation range is, where's the bottom that this market's going to find in this bearish trend? Wherever that bottom is, when we see all that accumulation, price will rally above it, and suddenly the addresses in profit will skyrocket. And that will demonstrate how many of those coins have actually now been accumulated by those stronger hands, if that makes sense. So what it's trying to pick up, what we'll see in this, is where that accumulation bottom is, because we're going to get a small uptick in price out of the accumulation range, which may only be 5%, 3%, but we're going to see a huge increase in the percent of addresses in profit, and that will help us confirm where that accumulation bottom really was. Yes, it'll be a little bit after the fact, but again, we use all these different metrics at different times to give us insight into what's going on. Futures open interest is still down. This is good, right? We actually want to see this. Funding is actually going a little bit negative, which, kind of gives an indication of the sentiment. Eventually, everything's going to go into backwardation. It's going to be super bearish, and Bitcoin's going back to $1,000, and that'll probably be the bottom. Now, we mentioned the long-term holder side of things, so we can see that they're continuing to hodl. This is like a coin maturation metric. It's showing when coins are transitioning across that short-term, long-term holder boundary. So what we're really seeing is coin maturation. These are coins that were accumulated roughly at the same price, but back in January. So what we don't want to see is this metric actually start reversing into this red zone. That would be bad. But as this continues higher, especially if we get a breakdown in price below here and this continues to trend higher, that really is showing that people they have a high conviction, right? Now, what we actually don't want to see is pretty much this initial trend that we're seeing in the miners position change, right? So again, this is only one candle, and there has been a lot going on in the mining space that, it is dynamic. There's a lot going on in the Chinese mining markets, changes in regulations and the like. But what we really don't want to see is an equivalent to this where suddenly we're in the green on the long-term holders, price drops, and then suddenly we get a red candle and this, actually turn into a significant trend. So I'm kind of not surprised that miners are unloading a little bit. It's going to happen. There are small-ish overall sell pressure relative to the total volume traded on a daily basis. But again, we'll have to see how this trend develops, right? But again, there is external factors happening in the mining markets. This is pretty much showing, so this uptrend in long-term holders is pretty much capturing the gradient of what's going on here. Long-term holders in profit and loss, just basically accumulating. Again, this looks very much like the 2017 top. Maybe this is some kind of, I don't know if it's a macro top or not. It certainly doesn't look like one of the previous macro tops, but it's certainly, to me, going to be a intermediate, lengthier consolidation. The illiquid supply change, you can see here, this is basically what we saw in the liquid supply chart. These are those 166,000 coins coming back onto the market, right? That's essentially but you can see that what is good is that we're starting to have a downtick in that, right? So the amount of coins that are being spent is reducing. So the amount of new supply coming on is decreasing. What we need to see is demand starting to pick up to absorb that. And if we're looking at our, talking about demand, net transfer volume to and from, this is nice, right? We've got a couple of red days where there's, what is this actual value? This is something on the order of, not letting me measure this thing. We're looking at 11,000 BTC in a day. You can see we've got a very slight downtick in our balance on exchanges. So look, this is what I'm saying. The demand is there, but it's not there to the extent of the selling. And it's probably just going to take time, right? And this is the thing. I actually don't think we're going to be, bearish trend. We're going to go down to 20,000, 10,000. We could, but I actually don't think that's what's going to happen. I think there's a floor somewhere above that. And the reason I think there's a floor above that is both a psychological and a social layer. I think a lot of people are going to think as soon as we break down below this 30,000, they're going to go, it's over, game over, right? We're going back down to 5,000. Everyone's going to get super bearish. And I think that's going to trigger the complete opposite reaction. But again, I think there's a lot of dollars sitting on the sideline waiting for a resolution. If we get a break higher, they're probably going to step in and buy that breakout. And if we get a break lower, they're probably going to step in and buy that breakdown. So, we're going to find an accumulation floor at some point. And, the long-term holders continue to show conviction, which is positive. Short-term holders are the ones who are selling. And really, this is what happens. You get people who step in, they over-leverage, they go too long, too hard. And they don't have the conviction, and they're ultimately the ones that get punished the most. So let's jump now across to the Ethereum side and basically do the same. And we have a similar story, but again with a little bit of nuance in there. So in terms of remember, Ethereum is similar to Bitcoin that you can track dormant coins, but it's certainly different to Bitcoin that dormancy is not necessarily all of the story. Long-term holders can deploy their ETH in all sorts of DeFi smart contracts and move them around between addresses and still be hanging on to them. And that is simply because it has more uses on-chain. Now, what you kind of have to think about Ethereum as is an economy. Is the economy thriving? Are more people coming in? Are we seeing new addresses, which in this instance we are not? We're seeing a fairly substantial breakdown in new addresses, receiving and sending. We're getting a breakdown in sending is not good. That means that people are essentially unloading more than they're buying. Or at least sending to certain locations rather than receiving them. In terms of the changes in addresses with supply, you can see that our non-zero is ticking higher, although plateauing. Greater than 1 is ticking up. Greater than 100 is ticking down quite substantially. 100 to 1,000 is ticking down a lot. 1,000 to 10,000 are down a lot. 10,000 plus, which a lot of this is smart contract wallets and exchanges, ticking higher. Right, but also in recent eras, pretty sideways, right? You can see percent of supply in smart contracts sideways, number of addresses with balance greater than 10,000, which includes these smart contracts, sideways. Contract calls breaking down, even though we have a very, very low gas fee at this point in time. Even our total gas use is starting to tick down. So really, there is no demand on chain. Contract calls in internal is ticking down, external is ticking down. This is very interesting, though. We've got our balance on exchanges is ticking down quite substantially. was 11.15, and we're now down to 10.4. So we've seen a fairly substantial outflow from exchanges. So this is good to see, right? So we've got a downtick in a balance on exchanges, very, very slight uptick, although still within the range in that supply moving into smart contracts. You can definitely see a prevalence of outflows from overall exchanges, which is very positive. If we zoom into our global exchanges, so this is positive, right? Seeing outflows is what you want to see, albeit our TPS, or our total transaction demand, down, number of transactions per second down, NVT spiking higher, which is a more bearish direction. Total transfer volume trending down just the same as BTC, falling off a cliff really. Realized price trending sideways, which is really saying that the coins that are moving are more or less short-term holders rather than long-term holders, which is what you want to see. Number of transfers from exchanges really breaking down quite substantially. So this is demand interest, but at the same time, transfer to exchanges is falling off a cliff too. So we're in this kind of middle ground where the market doesn't really know which direction it wants to go. It certainly doesn't want to be going giga long or giga short, which we can see again in our open interest, pretty much stationary. We've gone slightly negative on our funding rates. So really, the market doesn't know where it wants to go. It's basically the calm before some kind of storm. I don't really know which way the storm is going to go. I have my bearish tendencies at this point in time. We probably should also look at our DeFi side of things just for that final check off as well. But really, the market's in this uncertain territory, right? The mempools are empty. No one's transferring to or from. Smart money's not spending. Short-term holders have already got their coins on exchanges. They're probably going to sell as soon as we get some downside action. Maybe smart money steps in. So I think volatility is there. And what we're really looking for at this point is, what does the floor look like? So, we'll be keeping track of those metrics. I think everything on check on chain is going to provide a very good balance of what those floor prices may be. Things like the Maya multiple, things like the realized price. Those are very good metrics for actually tracking and understanding what's going on in terms of where a bottom may form. And we can use those probability metrics to understand more about that. So let's just have a look at our top DeFi coins. I mean, these are just arbitrary, not really arbitrary, but ones that I've selected that I think represent market leaders, really. So Compound, Aave, Uniswap, and YFI in different sectors. Now, these are not perfect metrics, but it gives us a bit of an idea what's happening in the DeFi sector, which is arguably one of the more legit altcoin spaces. Now, in terms of, I'm looking at activity. Are people moving value around these tokens? Are they buying them, selling them, swapping them? Active addresses breaking down quite substantially for all of them. If we're looking at the number of transfers of the token itself, really very, very lackluster. Really not looking very promising in any way, shape, or form. Total transfer volume, so the amount of dollars of it that are essentially being accumulated or spent, breaking down quite substantially on all of them. Right now, there's very, very little to be overly bullish about, DeFi tokens. And ultimately, I think that's a bellwether for the market just doesn't want to be risk on at this point in time. It's certainly something to just be paying attention to. Now, just to close out, I actually wanted to bring your attention to this interesting tool. This is just one good example. So June Analytics, there's a lot of dashboards. Basically, it's crowdsourced on-chain analysis, particularly for Ethereum in the DeFi space. Now, the tools here are basically anyone can put together these things and share them. The one I'm looking at the moment is by this bloke, JD Cook, and it's looking at the DPI, which is the DeFi Pulse Index. It's kind of an index fund or a basket of all the DeFi tokens, so it's kind of just broad exposure, and it's market cap weighted and readjusts every so often. And what I wanted to point out is a couple of things. So I think this is a good tool if you just want to know what the direction of the DeFi market is. Are you getting buyers or sellers? There's a lot of cool tools in here, right? So you can look at everything from supplies, revenues, all that kind of stuff. But this is really for the DPI index. What I care about is, are tokens getting accumulated, bought, and locked up? Because when the DPI index is minted, it's going to take whatever the basket is, coins of the DeFi tokens, off the market. And you can see we have a very slight uptick through the month of May in total minting. We had minting in April and we had minting in May. So minting is good because it's creating new units, which is then sucking supply off the market. People can then obviously resell the DPI index on Uniswap or whatever. But ultimately, that's what we want to see. You can see that we also had a growth in holders, although unfortunately we're talking about majority as people who hold less than 10 units. But still, slight growth, right? Growth across the 10 units, growth across 10 to 49. Let's see what our 250s are doing. So 250s are growing. So overall, there's actually growth of holders through all of these over the last few months. Now, the one that stood out to me was this guy here. Total exposure by these different cohorts, right? And what I'm seeing is the area chart is basically how many of these DPI are owned by people who own 250 plus, 50 to 250, 10 to 49. So it's basically looking at who is accumulating and how much are they accumulating, right? Are they accumulating a huge size or not? How much of the supply is essentially held by those parties? And what's really good to see is these 250 plus whales essentially are actually making a fairly big push through the month of May. So there is accumulation going on by these larger players. And ultimately, that's what you want to see. It doesn't mean the bottom is in right now, but it does mean that if you're looking at what the smart money is doing, tools like this can give us a little bit of insight into what those bigger hands are doing. So I just thought this was an interesting tool just to bring up. And you can see here, May 2021, this is basically when people are accumulating at different months of the year. And you can see that there's a huge accumulation in May. It's been a very, very large month for total accumulation periods. You can see how much it's actually expanded to take over there's got percentages here. What's our gray? May is 27%, arguably. 27% of the total supply was accumulated in last month during the sell-off. So, this is a trend to just pay attention to. It's something that I find quite interesting. We'll see what happens as June starts to expand. I think June's down here in this little box here. We'll see how it starts to expand and how new holders come in. But this is another interesting tool that we can use to really start tracking for, what is arguably an index of some of the top DeFi tokens, or the ones that really have alpha on the overall space. It's something that we can just pay attention to and see those supply dynamics. So, there's a lot of tools out there, and I guess the trick is understanding how to use them. And really what you're looking for, when are the smart money stepping in? Are they going to be wealthy investors, large investors, and people who are buying pain? So, it's a good sign, and it tells me that I do not believe that the bull market is over. I think we're in an intermediate consolidation. And, as the market size of all these assets get larger, the time that it takes to resolve longer term, it just takes longer, and people are impatient, right? So we need to flush out all the Dogecoin investors. We need to flush out the Shiba investors. We need to flush out all of these stupid tokens and essentially get people to lose interest in it, just to get boring, and they're tired of losing money. They walk away, smart money accumulates, and we rinse, repeat the whole cycle. So hopefully that was a good insight. Just, a few different tools. There's not much demand at the moment. It's certainly on-chain. We're seeing some outflows from exchanges, but again, we saw a very large number of coins flow into them. So it's just going to take some time for that to resolve. Arguably Ethereum looks a little bit stronger in the on-chain flows. Coins keep coming out of exchanges. DPI is clearly being accumulated. So it's something just to pay attention to there. Maybe there's going to be an alpha play when that plays out. But Bitcoin has a habit of dragging the market around, and at the moment, it's feeling a little bit more bearish in my view, just purely based on the demand side. When we get a big resolution either to the upside or the downside, we will see whether the smart money step in and just wick the thing higher, or if we actually have to go down lower to find a new reconsolidation floor. Anyway, enjoy the rest of your weekend, and I will catch you midweek and in the chat rooms. Cheers.